This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe Rabil. I'm going to talk about a specific pattern today that I want you to be able to recognize so that you can avoid it. There's a decent amount of stocks out there that are actually showing this pattern in the tech world. And I just want to make sure that you can see this. And I'm putting a number of things together, looking at MACD and ADX and the price pattern based on the moving averages. So I think when you see this, I think it can be to your advantage. Again, what we're trying to do is get better at refining stock picks, avoiding bad trades. I know a lot of people want to find big wins, but the actual thing that you want to get good at is avoiding the ones that aren't really that great and reducing the loss side of the equation, taking fewer losses, but taking fewer trades because you're more selective. So let's go ahead and get into this example today. Bill.com. Symbol BILL. They actually have earnings coming in a couple days. So, I think this is a good one to use. It's not one that I would definitely recommend one way or another, but it is a really good example looking at the hard right edge right now and what it's doing and what's bothering me about it in the way that things have played out. So I'm going to start with a weekly chart here, zoom in a little bit. And what I want to point out here is if you notice, each time this has pulled back, you can see we had a pullback here to the 18-week MA. Look at this pullback here. Look at this pullback here. And then we have another one here. And so I just kind of want you to notice the reaction at these spots where you got a good reaction, where it didn't spend a lot of time here. I mean, this was a couple weeks and then it jetted off of it. This was 1 week and then it jetted off of it, 1 week and then it jetted off of it. So this was acting more like a springboard, the 18-week acting like a springboard. And if you notice here, it came down and touched the line with this bar, and then again with this bar, and then again with this one, and then this one, and then this one. And so it's sort of laying on that bar. And I want you to recognize this because I view it as more of a negative. I don't like when price is sort of walking along the moving average. See how this started to improve, like started to turn up, but it was still connected to the 18. So if you look at this, this had one pullback bar, and then the next bar got disconnected. This was not connected to that bar, and this was the same thing here. There was no connection on the following bar, and so and obviously this was disconnected here after this big bar to the upside. So if you notice, we tried to lift up, and it's still connected. It's been connected. Every one of these bars has been connected to the 18. So we want to see when an 18 or any moving average is actually strong, you tend to bounce off of it like a springboard and move away from it rather quickly. Now, I mean, obviously the way this declined, and we've been talking about kind of looking at the bars on the way down. These were pretty strong down declining bars. So sometimes you'll get this kind of choppy action. But when you get to the point where it's starting to lift off and it's not disconnecting from the moving average, you want to go down and look at the MACD and the ADX. So if you notice, we're kind of lifting up, and there's a direct upward kind of drift taking place in the price action here. But notice what MACD is doing and the signal line. They're going in the opposite direction. Now, when the market bottomed last year in 2020, I showed this on an hourly chart. Actually, it was a daily chart going the other way. It was a bullish sign. The market was pulling back, and yet MACD was holding. They were kind of going in the opposite direction. But in this case, we've got this kind of downward move, and I almost want you to think about this like a downward move and then a flag forming. You see how this looks almost like a bear flag? down move, and then sort of a flag. And you want to see if MACD is going in the opposite direction. To me, this is the likelihood is that we're going to get another test of support. Let me clear this off. So again, we've got this kind of upward drift. Now, only thing I want you to notice is look at where ADX crossed down below right here, crossed down below the 25 line going across. And even though we've drifted up, this continues to drop. It keeps going to the downside. So when you have ADX below 25, like we are here, you're looking for more consolidation. Now, if it stays below 25 long enough to create a pattern, if we get some kind of a pattern to develop, which would be like a ascending triangle or just a rectangular pattern going sideways, but we haven't done enough work. I mean, this really just crossed to the downside, and we haven't created any kind of a pattern at all. Triangle, nothing. You can't really draw in any trend lines to create a pattern at this point. And so this tells me that this needs more time. And if you notice my market, Friday's markets, the last couple of weeks, I've been saying that I'd like to see the QQQ do a little bit more consolidating in the near term. And I think a lot of that just has to do with what's taking place on these indicators and just based on the way it tried to rally up and test the high. Now, it's not lingering right at the 18, but if you look at a lot of the stocks inside the index, there is a lot of this taking place out there. So, I'm not trying to make a market call. I just want you to start analyzing this type of pattern where it's hugging the 18 and can staying connected, even though it's trying to lift off. This to me is not the 2 time frame pattern where I'm looking to get long on the daily chart on this pullback. It doesn't fit what I'm looking for because I don't like what's going on here and I don't like what's going on here. Now, if this spends more time underneath and kind of works its way down and this, consolidates under 25 longer and we build more of a sideways pattern, then I'm going to get a lot more attracted to this. But then we're going to have probably the MACD working down closer to the 0 line. So these are the types of things you got to get better at. You want to be able to see that this is not a pullback you really want to play. Now, they might come out with earnings and might just blow the top off, okay? But what I do, I'm a percentage guy. I'm playing the percentages, and I think the odds are against you in this type of play. I think there's too much resistance up here, 170. I think the odds favor more consolidation for now, and the MACD and the ADX are confirming that. So the other thing, one last thing I'll point out is if you look at the midpoint of this big green bar, so we have this huge green bar to the upside, and then I'm just going to eyeball the midpoint. You see how we overran that to the downside? To me, that's more of a negative sign. Now, it doesn't necessarily mean we have a massive amount of downside, but we might have some risk down to the lower end. And I think it creates resistance overhead. So I think your best case scenario is a trading range that could develop just based on that one bar. Now, just the fact that we overran that bar bothers me. Now, you put that in the context of the way this took place, the harshness of the decline, the way the MACD is trading, the way the ADX looks, then I'm more inclined to just pass on this. It's not the same quality of pullback like this was, or even this. So those are the types of things I think you want to be on the lookout for when you're doing these types of pullback trades. So hope this is helpful. Post any comments or questions you have. We'll see you next time.